Next is basic elements of value, the four pillars of real estate worth. So as we have told you in the morning, there are four elements: scarcity, utility, marketability, and demand. So these are the four elements on which value depends. So first thing is utility. So utility means how much the property is able to satisfy human needs and desires. How much a particular property is able to satisfy human needs and demands. In the Indian context, this is influenced by Vastu compliance, orientation, access to water supply, power backup, and security features. For example, a 3,000 square feet apartment in South Mumbai with persistent water shortage and 8-hour power cut commanded 30% less value than an identical unit in the same locality with the 24/7 utilities, demonstrating utilities' direct impact on the value. So I think this term utility is clear from this example. How the utility influence the value of a particular property. Next is scarcity. So scarcity, the finite supply of property or its attributes relative to demand. Because in India's densely populated urban centers, scarcity is particularly pronounced with land parcel at prime locations commanding extraordinary premiums. For example, in Bandra Kurla complex in Mumbai, they have increased in values over 300% over a decade, despite economic fluctuations, purely because of finite supply of developable land. See here. With this example, you can understand how the scarcity affect the value in a particular locality. Next thing is marketability. Marketability, what does the marketability means? It means properties appeal to potential buyers in the marketplace. See here, what is marketability? Marketability is basically properties appeal to the potential buyers in the marketplace. For example, proximity to the schools, hospitals, metros, social infrastructures, especially in the Indian cities, these things are very much affecting the marketability. For example, identical apartments in Whitefield, Bangalore commanded a 25% premium after the metro line extension was announced, purely due to the enhanced marketability from improved connectivity. And next thing is transferability. So basically, when a property is bought by buyer from the seller, it means property has been transferred from buyer to the seller. So what is transferability? It means the ease with which the ownership rights can be transferred from one party to another party. That is called transferability. So, for example, agricultural land in Haryana with multiple hairs sold for 40% below market rates of comparable clear title properties due to legal complexity and time cost associated with resolving ownership issues. Clear? These are the four elements of value, and we are considering it from Indian context point of view. How these four elements constitute the value of an asset. So it is not that, okay, first we will take some examples that will make the things more clear about these things we have already discussed, some case studies. Now we will consider how these four elements interact with each other to produce a particular value. So it is not that the property is having utility that will have higher value. How other factors are also combining with it to produce particular value. That will be the thing which will affect the value. So value must evaluate these elements not in isolation. You have to evaluate these elements not in isolation, but in the interconnected totality. For example, a highly utilized property with poor transferability due to legal complications may have significantly diminished value despite its practical usefulness. Similarly, a scarce property such as beachfront villa in Goa might still have a limited value if its utility is compromised by coastal regulation zone restrictions. Similarly, regional variations in these elements across India create unique valuation challenges. For example, in Tier 2 cities like Indore or Coimbatore, utility might emphasize parking space or groundwater availability. So utility is different in different locations. In Tier 2 cities, what utility means? Utility might be emphasizing market space, groundwater availability, etc. While in metropolitan cities like Delhi NCR, marketability factors like pollution levels and traffic congestion may play outside role in value determination. So you have to consider these elements in interconnected totality, not in isolation. So successful valuation reports explicitly address how these four elements contribute to the final value opinion, providing a logical framework that supports values conclusions and makes them defensible for courts, regulations, and plans. Next is what are the factors that affect the land value. First thing is location. So value of the land will be affected by the land. Location, in location there are certain things such as proximity to amenities. The land parcels which are nearer to the school, hospital, shopping centers, public transportation, they will have more value. And then, of course, neighborhood quality means Areas with low crime rates, good schools, well-maintained properties are more desirable. Then size and shapes. Larger plots have generally lower value. And shape, regularly shaped plots, for example, regular rectangular plots will be more valuable than the irregular shaped plots. Then zoning laws. Zoning laws means what is a permissible use in a particular locality. So zoning laws, permissible use means zoning regulation determines what can be built on the land, residential, commercial, industrial, etc. That will affect the value. And of course, future development plans means planned infrastructure projects or changes in zoning laws can increase value of land. Then market trends. Market trends means supply and demand. We will study these things in the economics part. Supply and demands and economic conditions. More the demand, more will be the value. More the supply, lower will be the value. And how it is, we will discuss in the economics part. Next is environmental conditions. Environmental conditions means soil quality. Of course, fertile soil is important for agricultural land. And land in flood prone areas is less valuable. And climate, favorable climate conditions can enhance land value. Next is accessibility. Accessibility means transportation links such as easy access to highways, airports, public transport. These things can increase the value. Then topography of the area. Topography of the area means elevated lands with good drainage will have higher value than the land which require earth filling and which does not have proper drainage. And the land with attractive views, for example, sea facing or ocean, mountain facing, they can command higher prices. Then legal factors such that the lands with clear title will have more value than disputed properties or unclear titles. And land use restrictions, easement, connivance, or other restrictions can affect land value. We will study what is easement or connivance in the coming lectures. As of now, you must understand if there are certain restrictions on the land use, they may affect the land value. Then, as we have told, what are the factors which are affecting the value? There are certain factors which are physical factors, then economic factors, legal factors, and social factors. We will discuss them one by one. Physical factors, in physical factors, you have to study location. Location, we have already discussed that proximity to schools, colleges, parks, transportation. It enhances the value. Then condition of the structure. Similarly, condition of the machinery in case of plant and machinery values, age of the asset, maintenance of the asset, structural integrity of the asset that affect the value. Then size and layout, it is especially in case of real estate values. Larger the size, lower will be the value. And of course, usable space, number of rooms, overall design of the structure, it also affects the value. Then environmental factors such as natural surroundings, climate, potential hazards, etc., it affects the value. Then in economic factors, market trends, supply and demand dynamics in the local market, interest rate. If the interest rates are higher, then persons buying property on the basis of get loans from the financial institution, they will have to pay more interest. So the demand it will directly affect the demand and thereby affecting the value, market value of the asset. Then economic health, employment rates, income levels, and economic growth of the local level, at the national level, and at the international level. And then development in the area, infrastructural projects and commercial developments nearby of the asset. Then legal factors such as zoning laws, property taxes, then building codes. So building codes complying with the safety and construction standards, whether the structure is complying with the building codes or not, and of course ownership rights. Then social factors, demographic factors such as age, income, and population growth in the area. Then community well-being means quality of local schools, crime rates in the area, neighborhood reputation. Then lifestyle trends in the area, preference for urban versus suburban living. Then cultural factors such as historical significance or cultural amenities, etc. Then environmental conditions, this we have already studied. Next, you have to study urban infrastructure and its influence on value of real estate. So urban infrastructure, it plays a crucial role in shaping the value of real estate. Some key factors are accessibility and connectivities. If the places which are more accessible with construction of new roads, highways, public transport networks, they will have more value. Then improvement to the quality of life, community centers, parks, and other recreational spaces are examples of infrastructures that can greatly raise the standard of living in the neighborhood and thereby increasing the value of the properties. Then economic growth, as we have already discussed, the economy at the level, national, local, and international level, if it is growing, then demand will increase and thereby values of the properties will increase. Then sustainability and smart cities. So this is very important factor in today's scenarios of sustainability. Those who are from the architectural side, they must know this term sustainability. And smart cities, our central government has announced a number of smart cities in our country, which are being made smart cities in the coming years. So where you will be having high-speed internet, renewable energy sources, and other smart sustainable technologies there that are frequently included in the newer infrastructure development. And they raise the standard of living and thereby increasing the value of the assets. Then mixed use developments. So infrastructures that supports mixed use development, combining residential, commercial, and recreational spaces. These often command higher value. We will be taking certain examples that will make the thing clear in the coming slides. Then risk mitigation. In the emerging markets, the impact of infrastructure on property value can be influenced by certainty of project completion. If the developers are able to complete the projects within stipulated time, that will increase the confidence of the buyers and thereby increasing the value of the assets. And of course, with the advent of RERA, these things have improved a lot. Now, as a real estate valuer, you must know what is real property. So, real property is land or anything that is attached directly to it, including any subset of land that has been improved through legal human actions. That is called real property. Anything, real property is land or anything that is attached to the land. So, for example, buildings, ponds, canals, roads, and machinery, and other things. In land law, where the term is mostly commonly used, real property entails to the right of use, control, and disposition of land and its attached objects. The next is a type of ownerships in real estate properties. First is first type of ownership is possession. Possession means you are possessing that property. हिंदी में क्या कह सकते हैं कि आपका कब्जा है प्रॉपर्टी. You are possessing that property. So the right to live on the and utilize that land. That is possession. Control. Control means, see the difference between possession and control. Possession means you have the right to live on it and utilize the land. Control means you have the authority to decide within the bounds of land how to utilize the property. And exclusion, the property authority to bar others from use the property exclusively for you. You have the right to stop someone from entering your property. You have an exclusive right over the property. That is exclusion. So there is a difference between exclusion and enjoyment. Enjoyment means the freedom to make any lawful use of the property. Then disposition. Dispossession means the authority to transfer, sell, or lease the asset. That is disposition. Next is different types of ownership types. First type is sole ownership. All rights of the properties are owned by one individual. That is sole ownership. Then joint tenancy. This type of property ownership gives two or more people equal share and survivorship rights. That is joint ownership or joint tenancy. Then tenancy in common. Individual shares held by several owners are transferable and may be unequal. Joint ownership, in joint ownership, each owner is having equal share. In tenancy in common, there will be a number of shareholders and each may be having unequal share. That is called tenancy in common or ownership in common, you can say. Then community property. In certain legal systems, a married couples own jointly any property earned during their marriage. In certain communities, not everywhere, in certain communities. Maybe that a property is given to them, which is jointly held by them. And then trust. An entity holds the property and on behalf of another. That is trust. And then there are certain additional interest. Easement. Easement means you are not owner of the property, but you have the authority to use it for certain purpose. means the permission to utilize someone else's land for certain use, like a driveway or utility line. We will discuss it in the real estate laws when we will study what is easement, but as of now, you must understand. It is a type of right. Then leases. Leases mean you have the permission to occupy and use that property, subject to the restrictions as mentioned in the lease deed. We will discuss in the leasehold property in the coming slides. As of now, you might understand it is a type of right. And mortgage. A lender's interest in a property as a security for loan. That is mortgage right. Then type of occupancies in real estate. First is primary residence. Primary residence, the owner resides in the primary residence for most of the year. That is primary residence of home. Then second home, this refers to the property such as vacation house where the owner resides for a portion of the year. It is on the basis of timeshare contracts. You have bought a share in a property where you may live for 1 month of the year on the basis of timeshare. And next month, someone else will be living there. That is second. Then investment property, the properties which are bought with the intention of giving these properties on rent for fetching some income. That is investment property. Then seasonal properties that are occupied only specific time of the year, such as you go to the mountainous region during the summers to spend some time there. That is seasonal occupancy. And then the right of occupancy. This allow an individual to live in a property and until they choose to leave, often sees in agreement after the death of his spouse. That, that is right to occupancy. Then life estate. This is a legal agreement with the landowners gives an here ownership of the property but keeps the right to occupy it for the rest of their lives. That is life. So each type of occupancy has different implication in financing, taxes, and legal consequences. And then most important thing, highest and best use that we have been. So highest and best use, we already discussed this, what is highest and best. It refers to the most profitable, highly legally permissible, physically possible, and financially feasible use of a property. That is highest and best. So legally permissible means that you want to make a commercial building. For constructing the commercial building, the property should be situated in a commercial zone. Only then it is legally permissible. You cannot construct a commercial property. Of course, commercial property will fetch higher value, but you cannot construct a commercial property in a residential. It should be legally permissible. Second is physically possible. Now, you want to construct a mall. Now, you can construct a mall if you have a large chunk of land. If you have a 1,000 square feet of land, you cannot construct a mall there. It will be physically possible if you have a adequate land for constructing that mall. That is physically possible. Then financially feasible. Financially feasible means you constructed a mall, but you have constructed it in an area where you are not able to get number of tenants. Most part of your mall remains unoccupied in the year. You are not able to get back the money you have invested. You are not getting enough rent, enough payback on the basis of rent. So it should be financially viable that you constructed a mall, but you have to check whether you will be able to get the money you have invested within a reasonable time, whether it is financially feasible, and then maximal money productive means the use must yield highest net return compared to other potential. For example, a piece of land is currently used for agriculture, but could be developed into a residential area that meets all four above criteria. If it is meeting all the above four criteria, then the residential development will be considered highest and best. Next is characteristics of real estate. First thing is scarcity. And most part of the, especially in the urban areas, land, there is limited supply of real estate. So, more scarce an item, a commodity is more value it has. As you, for example, you consider air is available in abundance, or iron is available in abundance as compared to gold. Because of scarcity of gold, it has more value, it has more price. So, because of scarcity, the of land, real estate has more value. And then improvements. So you can make improvements in the real estate. You can construct a building over the land, thereby increasing its value. You can remodel them. You can retrofit them. You can build a new structure, thereby increasing the value of the real estate. Then location. So this is especially in case of real estate. Depending upon the location, property's location is very important in case of real estate. If it is located in a posh area with the best amenities available, it will have higher value. And then investment permanence. So most of the time, most of the investors, they are investing in real estate because of long-term investments. It can be a reliable asset. Then uniqueness. So this is not in other types of assets. You may have similar types of machines, exactly similar type of machines. You may have similar cars of a brand, but you cannot have exactly similar buildings, two similar buildings. There may be some difference because of its location, architectural style, features, etc. There will be certain difference in that. No two real estates are similar, exactly similar. Of course, at least their location will be different. So uniqueness is a feature of for real estate. Then, of course, immobility. This is the problem with real estate. You can purchase a car from Delhi and you can sell it in Ludhiana, but you cannot do it in real estate. You buy a property in a village, you cannot take it to Delhi to sell it. That is the problem with real estate. And then indestructibility. Although the structure may decay, but land is unbreakable and always have a value. This structures may decay, but the land part, it is unbreakable. Of course, until and unless it is affected by certain natural calamity, it is indestructible. So next is investment in real estate. So what there are different types of investment you can make in real estate. You can buy properties which can be given on rent from where you can fetch income. So these are called rental income. And nowadays there are real estate investment trusts. These are the companies that own, manage, and finance real estates that can generate revenue are known as REITs. You can get dividends by investing in REITs without having actually owning the real estate properties. And then house flipping. House flipping is that you buy a proper house, you make certain improvement in it, and then you sell it at a higher price. That is house flipping. Then crowdfunding platforms. To finance real estate developments, these platforms combine contribution of several individuals, where you can achieve maximum profit with a minimum investment. That is crowdfunding crowd platform. Then you can invest in real estate mutual funds and exchange traded funds from there, where you can earn profit. So these are the investment types of investment in real estate. Then what are the demand and supply schedule in real estate? So demand and supply in real estate, it depends upon the economic growth at the local level, at the national level, at the international level in a particular location. Then interest rate, higher the interest rate, lower will be the demand, lower will be the value, and vice versa. Then demographics. So demographics in a particular area, if the population is growing or number of persons are migrating from other areas or generational of housing preferences, it will affect the value of the property. Then consumer confidence is the proper consumers are feeling confident about the financial futures, they are more likely to invest in real estate. And then government policies such as investments like tax rates, subsidies, and grants can improve demand. Then what are the factors which are affecting supply of real estate? Construction cost. Higher the construction cost, lower will be the supply. Then if the Land is available at a cheaper rate and without any restrictions, with minimum restrictions, then the supply will be more. And government zoning such as building codes, zoning laws, they affect the supply of real estate projects. Then technological investment, with the advancement of technology in the area, construction cost can be reduced with the new machinery, thereby increasing the supply. And of course, a strong economy, it can lead to the more supply. Then the difference between market value and investment value. So market value, we have already discussed what is market value. What is investment value? We have already discussed, but we will now make the difference between. The investment value, we already discussed the value of a property to a particular investment. Investor are a class of investors. For identified investment objective, reflecting investors' specific criteria rather than market-wide expectation. So investment is for particular investment in a particular area with particular objectives. So market value may not be investment value. So these are basically based upon specific investors' requirement and salaries. May incur or correlate unique tax situations or cost of capital, and can reflect a strategic consideration beyond direct returns, may differ significantly from the market value. We will discuss this example because in this example certain things are there which are not clear to you as of now. We will take off after we certain things are clear to you. Next, last topic in your syllabus is green building concepts. So green building concept, those who are from architectural side, they know this green building, but for others, we will be taking certain examples that will make the things clear. So green building concept, basically, it is a holistic approach to construction and development that aims to minimize the environmental impact and enhance health of and well-being of occupants of that. For example, the things which should be there in the green building are sustainable site selections. So we should select a site which is having lower impact, environmental impact, such as avoiding floodplains or protecting natural habitats. Then we should design the building energy efficiently, buildings which reduce energy consumption. We should design the buildings which are water efficient, which are having components, equipments which are water efficient, and we should ensure that construction should ensure good air quality, natural light, and thermal comfort to the inhabitants. And we should use sustainable, recycled, and locally sourced material to reduce environmental footprint of construction, and put a strategy in place to reduce, reuse, and recycle construction and demolition. So what are the economic benefits of green building construction, and what are its valuation impact? So with the green building, what will happen? The operational cost will be reduced. Because of green building construction, it will reduce utility expenses and maintenance cost over the building. First thing will be it will lead to operational cost saving. It will lead to energy saving. Green buildings will have 25 to 35% lower electricity cost. They will have 30 to 50% reduced water consumption. The energy efficiency maintenance will be lower maintenance cost. It will have 10 to 15% lower maintenance cost. So taking in these things into consideration, so capitalized utility saving in DCF models apply lower operating expenses and ratios in income capitalization. These things will be clear to you when you will be using income approach. Then it will lead, green buildings will lead to rent and price premiums. Rents of the green building will fetch higher rental. They will increase sale values. Rent, commercial rent will be increased to 5 to 10%. Residential sale prices will increase by 2 to 6%. And because of environmental environment, it will have higher premium. So we will have to take these things into consideration while valuing green buildings. So it will have occupancy benefits. It will lead to 3 to 5% lower vacancy rates. So basically, what will happen? What is vacancy? Is when you have a building which is being given on rent, maybe certain portion of the building will remain unoccupied. That is called vacant or vacancy. So in case of green building, these vacancy rates will be reduced by 3 to 5%. And because of green building, tenant retention will be increased by 10 to 15% because of renewal probability. And similarly, it will reduce the risk to regulatory, market, and physical risk in the buildings. For example, a grade A office building in Bangalore, between LEED certified and non-certified building. Of course, there are 2 to 3 government councils which are giving green building certifications. One is LEED certification and other is GRIHA. So these certifications are given on the basis of certain criteria, which if the building is fulfilling a criteria in certain, based upon certain criteria, the building is certified as LEED certified building or GRIHA certified building, as the case may be. So if we take an example of LEED certified building and non-certified LEED certified building in Bangalore's outer ring, then what will be the difference? Then the LEED certified building will command a rent of 85 to 90 per square feet, as compared to non-grade LEED certified will maybe having 75 to 80 rupees per square feet. Means 8 to 10% higher rent it will command. And then certified buildings will are demonstrating 32% lower energy cost and 48% lower water cost. And occupancy advantages These building maintains 95% occupancy during market downturns versus 85% for non-lead compliant building or conventional buildings. And you can take this into your valuation. The combined effect may be translated to a 12 to 15% higher capitalized value per square feet. We take similarly in case of residential case studies, in IGBC greenhouse certified project, they are having 4 to 6% higher pricing during initial sale price, and with the passage of time, they project are demonstrating 25 to 30% higher sale velocity, and they are having 25 to 35% monthly maintenance cost reduction, and they are having 5 to 8% better valuation retention during market corrections. So we will take these valuation approaches when we have studied different types of different approaches to the valuation. So this is certain slides we have not considered because we will take them into consideration after doing the different approaches or to the market. ठीक है संदीप जी, we will having a lunch break.
Yes, sir. So friends, if you are having any doubt related to this topic till now, you can ask. Yeah, any doubt related to this topic?
Sir.
जी सर.
Hello, sir.
जी सर, कमल जी.
Sir.
In one of your slides, you mentioned non-income fetching marketable properties.
हाँ जी.
In one of your slides, you mentioned non-income fetching marketable properties.
जी सर.
You have mentioned shops and factories in the non-income fetching properties.
Sir, shops and factories which are being self use.
Okay. Which are first. When we have to analyze for the shop, we have then we have to put in this category non-income fetching market.
Sir, your property, sir, non-income is that property. If you have given a shop on rent, it will become income fetching.
This is for self per factories are always profit earning.
जी, that is non-income fetching.
Okay.
So देखिए, सेल्फ ऑक्यूपाइड हाउस, अगर आपने कोई हाउस लिया है और खुद उसमें रह रहे हैं, that will be a non-income fetching property. सेल्फ owned फैक्ट्री, सेल्फ owned शॉप, सेल्फ owned लैंड, अगर आप अपने पर्पस के लिए ले रहे हैं फॉर योर ओन एंजॉयमेंट एंड यूटिलिटी, then it will be a non-income fetching, but it is a marketable property.
Yes.
मार्केटेबल प्रॉपर्टी होगी तो अगर वो फैक्ट्री को इनकम कर रही है तो उसको कैसे वैल्यू करेंगे? दैट इज डिफरेंट इशू.
ओके.
That is different issue.
Okay, that I agree. Okay.
Yeah.
But sir, some comparable rent will be there, no sir. Suppose I am staying.
We will discuss everything in the forthcoming slides. वो शाहरुख खान जी का डायलॉग याद करिए. पिक्चर भी बाकी है मेरे दोस्त.
Okay sir. Okay.
Let's move slowly. देखिए, हम चाहते हैं बिल्कुल स्लो चलना, बिल्कुल स्लो से स्लो, so that each and everything आप हो सकता है उससे ज्यादा जानते हो या जो यहाँ पर पढ़ाया जा रहा है उससे बहुत बहुत ज्यादा जानते हो, लेकिन कुछ ऐसे लोग भी हैं जिनको इसके बारे में नहीं पता, हमें उनको भी साथ लेकर चलना.
Right sir.
तो बेसिकली डिफरेंस क्या होगा?
We are not considering you a student of more than a class of 10th. अगर हम 10th से शुरू करेंगे तो हमें इजी होगा पढ़ना.
Okay, we are learning in this way, sir.
अगर हम नीचे के स्टेप से चढ़ना शुरू करेंगे तो इजी होगा ऊपर चढ़ना. अगर हम 2-4 सीढ़ियां छोड़ के या लिफ्ट से चढ़ना शुरू करेंगे तो हम बहुत कुछ मिस करेंगे. So
okay, we are listening as a student, sir.
We are trying to.
बेसिकली डिफरेंस होगा कि हमने कौन सी अप्रोच लगानी है वैल्यू के लिए.
Okay sir.
ऑफ कोर्स उसके लिए कुछ नोशनल रेंट होगा, जैसे हरिहर जी ने कहा है, लेकिन जब आपने वैल्यूएशन करनी है तो अभी हम आगे जाके पढ़ेंगे कि देयर आर डिफरेंट अप्रोचेस, कि नॉन फैचिंग, नॉन इनकम फैचिंग के लिए हमें कौन सी अप्रोच लगानी है, उसके लिए है
ओके सर, ओके ओके।
जी। एनी अदर डाउट?
Yeah. Any other doubt?
Sir, I have
Related to
one.
this topic.
Hello.
Sir, I
Yes.
have one request. Sir, please make this communication or the conversation in English. Sir. We are from South.
I am making a conversation in English only that when
Yeah,
someone is asking in Hindi, I have to give a reply in the Hindi.
and actually that is useful for us.
Also, what I said is that basically these differentiation of income fetching, non-income fetching properties, that we have to make our decision on the basis of which method we will be applying for calculating the value. Whether we will be using income approach, whether we will be using cost approach, whether we will be using market approach, on the basis of type of the property. It is not that if it is a self-occupied, that it is not generating any income, because it is saving some rent for me.
Yes, for
That
us.
will also be called an income, but basically we will not be considering that income to convert it into value.
Yes.
Basically what we have to do, what if it is an income generating property, we have to convert that income into value. How it will be done, we will be doing it in the income approach.
Okay.
Is it clear, sir?
Yeah.
Any other doubt?
Sir, we have considered so many types of values. One deferred value of land we will be using, that also will be required in valuation.
But
Deferred value of land.
Deferred value of land, sir, these are just the number of values we have discussed. There are many other types of values which we are not able to discuss here. They will come as a case.
Okay, sir.
In that syllabus only just different types of value.
Sir.
Not the name is given. We have discussed about 50 to 55 values, but still there are many other values which are not discussed here.
Okay.
Okay, sir, what time we are meeting again?
Sir, Sandeep ji will tell you.
Yeah,
But we are just
it is 1:30 now. It is 1:30 now. Sir, can we take, because today is the first day and the participants may not be very much conversant with the class, online classes. Can we take a lunch break for 1 hour, if you permit?
Okay, sir.
So, thank you very much, sir. So, friends,
That will be fine.
It is 1:30 now. We will rejoin sharp at 2:30. 2:30 will be the attendance time, and the person who will not be able to join till 2:30 will not be allowed to continue after that session. And we will join sharp at 2:30. Until then, you can switch off your screens. Even you can leave the meeting and join 5 minutes before starting the class, 2:25.
Okay.
To charge your laptop and
sir, after lunch, all the participants are requested to have a copy, pen, and a calculator. We will be starting with our
Mr. Ashim Kalia. देखिए, अगर आपको जरूरत नहीं है तो आप प्लीज लीव कर जाइए। जब तक यहाँ पर आपको स्क्रीन ऑफ करने के लिए नहीं बोला जाए तब तक आप स्क्रीन ऑफ नहीं करेंगे। मिस्टर अभिषेक गोलचा,
सॉरी सर,
ज्यादा जरूरी है, अगर आपके लिए कोई भी काम जरूरी है मोर देन दिस मीटिंग, प्लीज लीव द क्लास। वी आर नॉट हैप्पी विद यू।
So please have a copy, pen, and calculator with you. At the start of, we will be starting the topics related to certain formulas which are very, very, very important from your examination point of view.
And this is that will be the basic backbone of the valuation profession. We will learn each and everything from the starting from the class 10th onwards, and then we will move slowly and steadily towards our main goal and main aim and main target. Till then, you can switch off your screens now, and we will meet sharp at 2:30.
All right, sir. Thank you.